Morning, this is Andrew from Trend Following Mentor. Today is August 4th, 2015. In a short video, I'm going to talk about where we are in the stock market right now. And also I'm going to accentuate Apple, which is one of the key components of the Nasdaq. What I'm going to first point out is you can see just the Dow. And this very important line is the 200 period exponential moving average. Basically, when we're above it, you want to be long. And when you're below it, you want to be either short or out. And it's been pretty tough. I mean, you had a period here, which was, you could call it a bear trap. You can see it says bearish here. And then we took out again. And where we're at right now is very interesting, where we have some support here, where we bounced off, went below, bounced up again, and now we're below this 200-day exponential moving average, and pretty much sitting right at support. So it's pretty interesting. The other thing, and also I'm not on a buy, and you can see where I have this Andrew Abraham buy. I'm not in the stock market. I'm not long, I'm not short. It's been a very, very difficult period for bulls and bears. Another thing I look at, which is based on Marty Zweig and Ned Davis, is basically one of the components. It's called 4% rule. This also is on a sell. That if we fall 4% from the highs on the value line arithmetic index, you go to cash, or if you want to be so your nature, you can go short. It's all your decision. The other thing, when we look at now, let's go to the S&Ps. According to the model I use also, it's in cash. And you can see we're in this choppy period, even though we're still slightly above the 200-day exponential moving average. We're not getting anywhere. We haven't taken out these prior highs, and we've had lower highs, and we'll see if we have lower lows. This also, it's not on a buy. But actually, ever so slightly, let me move it over, the Nasdaq is. The triple Qs, QQQ. And it's been on a buy since here. And my simple rules are if the moving averages cross, again, you can pick anything that you really feel comfortable with. I like the 10 and the 30, and if also I fall 3.5% from the highs, I go to cash. What's interesting, the most interesting to me is if I look at Apple, which is a large component, and with all the great news about Apple, Apple Wallet, Apple Watch, iPhone 6, guess what? It's just not doing it. Can't take out the highs here. This is a very ominous bar here. Gap up, close on the lows, gap up, and then we gap down. But what's even worse is you can see we have support here. Here, here, here. And yesterday we went below it. We're also below the moving averages. And what I like doing is I make very eye candy that I can see where I am. Bearish. A little unhappy face. So what is the point? Apple has been fantastic, but there's also times Apple isn't so fantastic. This is a big drop. Anything can happen when we trade. So what is the idea? Is you have to have a trading plan. And this is what I do. I try to teach people how to trade better, invest better. I have the Bible of Trend Following, the Bible of Compounding Money. I have a course for $99. And also have one-on-one consulting. And if you want the course, I would also do the hourly consulting with you. The best way to do is just email me. If you have any questions, I'm more than happy to help you. But really, this is what the whole idea is, how to become a successful trader and be independent and be your own guru. Thank you very much.